Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. And with that, today we're taking a look at Lowe's Company, ticker symbol LOW. This is a major home improvement retailer in the United States. The market cap of $110 billion makes this a large cap company. And Lowe's is also a dividend aristocrat, having paid increasing dividends for more than 25 years. And speaking of the dividends, I'll just briefly take a look back at the last several years of dividend increases we've seen from Lowe's. You'll notice that they consistently raise the dividend at a rate exceeding inflation. So you can expect to have your dividend grow at an increasing rate over time. And they are, in fact, on pace this year to exceed last year's dividends. So they are going to maintain their dividend aristocrat status. And here we are on Lowe's annual chart, and you'll see the share price is well below all the major moving averages. This is a drastic downturn the company took, and mostly this is just the effects of a poor housing market and rising interest rates. And if we look down at the RSI, you'll see it's well into oversold zone and appears to be going sideways, recently bouncing in and out of oversold back and forth. The RSIs are both oversold, although they appear to be going in opposite directions at the moment. The volume chart shows, as you might expect, quite a bit of red selling days lately, though the volume does look average other than a couple of noticeable spikes. And the MACD has been below zero for quite some time, and it does not give a strong signal one way or the other. It does look like it just bounced off that zero line and either dropping lower or flattening out. So all these signals together make me think that Lowe's could be in for some further down days. There's really no position of support that I can see here on this chart, and I expanded the chart further and going back in that more than a year, more than 2 years. Those times are so far in the past, they really don't mean much, but there's a tiny bit of support you might be able to find using those indicators if you were so inclined, but I would not be. If we move over to take a brief look at the fundamentals here, you see there's very low short interest at 2.07%, and institutions owning Lowe's over 72%. So that does look good. We're not given a debt comparison for the industry from Lowe's. These numbers do not look particularly threatening to me. And if you look at the PE ratio, you'll see the PE is high for the industry. It is the highest, in fact, in the home improvement products industry at 18.74. Even though it's particularly high, this is not an overwhelming number at 18. A PE of 18 is, it's a little high in general for the whole market, but it's not so shockingly high. However, in comparison to the rest of the industry, I would like to see Lowe's come down a bit more before taking a position here. And we have the gross margin, 33%. That is quite good, and that is average for the industry. On the other hand, the operating margin is only 10.51%. However, that is well above average for the industry that operates on relatively narrow margins, and that beats out 75% of other companies in their industry. And we have a lower than average growth rate. Of course, Lowe's is rather large, so it is more and more difficult to grow, in particular with the increasing cost of materials shipping around the world, as we've all seen over the last couple of years. So the growth rate is not surprisingly below average and is less than 75% of its peers. We are not given a return on equity for comparisons here, but I will say the return on invested capital of 22.7% is excellent. That is quite an impressive number, especially in this business. And the dividend, as we already talked about, 2.19% here listed. When I looked in Schwab, it was over 2.3%. So depending on how it's calculated, you'll get somewhere between 2.2, 2.3 in that range. The payout ratio of 42.18% is quite sustainable. I do expect Lowe's to want to maintain that dividend aristocrat status and to continue paying an increasing dividend for at least the foreseeable future. So overall, I think Lowe's should at the very least be on your watch list at this point. It's getting close to the time where I would be willing to take up a position here. And if it does get down to that 52-week low, then perhaps I will do so. Please let me know what you think of Lowe's in the comments below. And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. These videos are for entertainment, discussion, and education. But if you'd like to see a specific company analyzed using these metrics, let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.